Hello friends, welcome back to my channel. This is a quick video about option basics and how to follow alerts from any analysts that are sent to your inbox. So if you want to trade those alerts or not, it's totally up to you. I'm just telling how to read those alerts and how to make stock option trades. Okay, so first of all, starting with, suppose this is a Microsoft chart. As per this chart, I can see that always Microsoft is above my red line. This red line is volume weighted moving average 30-day, and I can see that always it touches this line and goes up. So again it has touched this line and it may go up in future. So what I will try to take over here is, maybe I'll go for a call side on Microsoft stock. This is a 1 hour chart. Now if I have to follow the options, let's go to your broker. You can I'm not opening my broker over here. I'm just going with Market Watch. If you have a account on Market Watch, you can just see the option values. Okay, so in this will be very similar to what the broker shows a page for you. So here you can see many tabs in your broker account also. So we'll go to the options tab directly. Okay, once you go to the options tab, oh sorry, I didn't select the stock. Let's select the stock, Microsoft. Okay, so once I select Microsoft stock, I'll get the overview and all the tabs for Microsoft stock. So now let's go to the options. Okay, so main thing that are associated with options are the expiry and the strike price. So whatever the alert been sent to your inbox, they will tell you which expiry to choose and what is the strike price to choose. Okay, the strike price might be in the money and out of money. I'll talk about it in a little bit. So let's first choose the strike price. Here I can see all the months listed here: February, March, April, and all these months of 2024 and some of the months of 2025 and 2026. Okay, so maybe the alert will be for next 5 days, which is the options expire here in America on every Friday. That is the last, or I would say the last trading day of the week, the last business day of the week. That may be a Friday in normal conditions. If Friday is a holiday, the option might expire on Thursday. Okay, so let's go with February. You can see that all the strikes have been expanded for you. Okay, and in February you can see that this is 2nd of February. Now if you think that a stock will go up, you trade for calls. If you think that the stock is going to go down, the analyst, or it may be your own analysis or your own chart setup. Okay, if you think that the stock is going to go down, for example, if you think about Tesla, if it is going to go down, you'll buy a put. Okay, so if you just in some brokers you have options to click on calls and click on put, so that it will expand you all the strike price. In some brokers they are listed side by side. So for here, in example over here, the calls are here, and if I just slide right, I can see the puts. Okay, now I will keep it in somewhere middle. Okay, I just want to see the bid prices. Okay, so on the right side you have the puts and on the left side you have the calls. Let's go ahead to the current price. The current price of Microsoft, current running price of Microsoft is near 404, 403.93 to be accurate, 404 around. So anything on the call side, the out of money is those strikes which have not yet reached 404. Means if you choose a strike value that is more than the current price, so those strikes are out of money. If you, for call, if you choose a strike which is less than the current price, that is in the money for call. Okay, so here if you see, 400 call is in the money, 405 call of February 2nd is out of money, 410 is out of money, 415 is out of money. Similarly, 310 call is in the money, 395 call is in the money, and vice versa for put. Means If I slide right, 405 is already achieved on the put side. So 405 means going downward. Okay, suppose if the Microsoft stock has been falling from 410, it has already crossed 405 on the downside. So 405 is in the money. So now this one here, we are talking about puts. So this one here, as I'm showing on my screen, 9.87, this put is in the money. 405 put is in the money if the stock price is currently 404, and 400 put is out of money if the stock price currently is 404. So this is in the money and out of money. So basically you choose, let's talk basically on the calls only. So you choose a strike. Okay, if you click this strike, it will open up a window for you. This is not a broking account, this is just a watch account. So here I am not able to trade it, but if you just click this 405, and you can take a trade, you can, it will allow you to enter a limit price. So for example, 910 is the current bid price. You think that Microsoft will go down little bit, maybe 50 cents, so you can put as 9.00. Okay, now another thing in USA, the stock market is lot size. Lot size is fixed here in USA, and the lot size is 100. So if you say that an option is 9.00, means you have to take 100 is the lot size for one lot. So if you take one lot, you have to pay 9.00 multiplied by 100, which is $900 you have to pay if you want to buy that. Okay, similarly, if some option is say suppose 2.5, okay, 2.5. So in case to buy that option, you have to multiply it by 100, so that will be $250. Okay, $250 if you pay, you can buy that option. Okay, call option. So now this was about some basic concepts of in the money, out of money, lot size. We choose the expiry, we choose the strike price. One little thing about the expiry is, the further you choose the expiry, it is better for you. The risk will be less, means if at all the trade goes on the losing side, that the loss will be slower. Means if it lose say 10% only, if the stock goes down by $1, something like that. Okay, whereas if your expiry is near, the loss will be faster. Okay, so these all things you must be knowing before you enter a trade. For all the beginners, I would just say you need to practice for at least 2 months, at least couple of months on paper trade. On paper trade, you don't need paper trade accounts to do a paper trade. You can just write it somewhere. If you think that you should take this contract, you write it on a piece of paper with the time. Okay, and then you can see the result after 1 hour, after 2 hours, after one day, whatever is your time duration where you have planned to exit the trade, what is the price after 1 hour, 2 hour, or the next day. Okay, so that way you can do it on paper trade. Now some alerts will say BTO. BTO just means buy to open. Means if you are buying a 405 call at 9.005 for Microsoft, you buy to open. Okay, and then they will say sell to close. Okay, if at all your option has gained, call option has gained, say suppose 50 cents, if you plan to sell it 9.50, means you will sell it for $950. So $50 would have been your profit, and the alert might be there, sell to close. Okay, now little bit about the spreads. In a debit spread, if you buy an expensive option and sell at the same time, sell a cheap option, and net value you need to pay, means the buyer, the person who is doing that trade, has to pay. That is called a debit spread. So for example, in respect to Microsoft call options, if I buy a 405 call, I will pay $9-10. If I sell a 410 call, I will get 680 from the market, because I'm selling it, so I'll get 680. So in the net, if you see, the difference is 2.30. Okay, so if you buy a 405 call and sell 410 call of Microsoft on of expiry February 2nd, you will end up paying 2.30, means $230 multiplied by 100. Definitely you have to do, so you'll be paying $230, and that will be a called debit spread. Okay, call debit spread is very similar to buying a call. The only thing is the profit will be slower, loss will be slower. Okay, because there is a sell side also involved, so profit will be slower, loss will be slower, but it's a moderate strategy. Means some people just want to gain. They say that slow gain is fine, but they don't like fast loss. If it goes on the loss side, the loss will be faster. Okay, so if you are a moderate kind of trader, spreads are good for you. Then the second example of a spread is credit spread, in which you sell an expensive option and buy a cheap option, but the broker will reserve the block or block the maximum loss that can happen. So for example, over here 405 call and 410 call, the difference is 5. The difference between the strike 405 and 410, the difference between the strike is 5. So maximum this call can go is up to 5.00, so 500. Okay, so the broker will block 500 from your account. And if you want to do this credit spread, means you are selling an expensive option that is 9.10405 strike and buying a 40410 call, or say 410 call, and you are buying it for 6.80, means you are collecting $230 from the market. You are collecting $230 from the market. Okay, but the broker will block 500 from your account. All inclusive, the broker will block 500 from your account, so that if at all it goes in reverse direction, if this now you have sold a call option, means what you want actually, your direction is that the stock is going to go down, the stock is going to stay there, or it's going to go down, then only you will get benefit. Means you want the credit spread to go lower than your entry price. So for example, your entry price for this was 2.30. If Microsoft goes down little bit, say suppose by $2, and after some time you see that the spread price is 1.50, so 2.30 to 1.50, that is 80 cents. 80 cents is your profit, means $80 multiplied by 100, 80 cents into 100, $80 is your profit on the credit spread. I have a video more elaborated on debit spreads and credit spreads. You can just check on my channel and you will find it more elaborative. Whereas this is just an example how to check on these alerts. I told mostly about the call side. I'll tell a little bit on the put side also. Let's go into the Tesla chart. Tesla earning, market did not like Tesla earning, and it has been falling down a little bit. If you see that, it's much below the red line. So suppose it might go and touch the red line, which is near, the price would be near 190 to 189. Okay, if it touches, there will be a high possibility that it will go down again after touching 190. So when it touches 190, you can go for a put. Okay, so again I will just show you the process once again. I will search for my stock on my broker, then I will click options. Okay, when it is at 190, I would like to buy 185 put. Okay, 185 put, suppose I want to buy for next week. Today is 28th or 29th of January. Okay, I want to give 2 weeks time. So 2 weeks time, the expiry that I can see on my calendar is 9th of February. Okay, so I have clicked options over here. I am in a February chart. If I keep going down, I can see that we are at expiry of 9th February. I want puts. Okay, I want puts and I want 185 put. So these are my puts. 185 put is here. Currently it is in the money because the stock price is 183 and this is my price, which is 6.90. But but I'm thinking that stock might rise up till this red line near 189 to 190, and then only I will buy my put. So I'll buy my, when I buy my put, when the stock is at 190, 185 will be out of money, and I suppose the price of this option, which is currently at 6.90, it may be at 4.50. So 4.50, I'll enter my trade out of money 185 put of Tesla of 9th February. Okay, I'll take that put, and then I will see what happens. If Tesla goes down from there, I will be able to get some profit. If Tesla goes higher after crossing 190, I will take a stop loss at suppose $100, and I will cut my trade on a small loss of $100. Okay. You need to always define your stop loss. Always define your stop loss whenever you are into a trade. You should have a plan. You should have an entry plan, and you should have an exit plan always. If you don't have an exit plan, it will be slightly difficult to manage the trade and manage the risk. Okay. So that said, if you have any questions, do post comment on my channel. And so once again, don't get confused. Tesla 185 put is currently in the money. It is in the money because Tesla is currently trading at 183. Don't get confused that I am saying out of money. Out of money, it will become if Tesla rises till 190. If Tesla rises till 190, then 185 put will become in the money. Currently, it is if Tesla rises to 190, 185 put will become out of money. Okay, currently it is 185 put is in the money because Tesla is trading at 183. Okay, so if you understand on one side, say suppose if you understand things on the call side, you can make a reverse and you can understand it on the put side as well. Okay, any questions, do let me know. Thank you for watching my channel and this video. If you like this video, do plan to click like, and if you always want to subscribe this for having future alerts, do go ahead and subscribe my channel. Thank you for watching once again. Happy trading and wish you lots and lots of profit. It's a huge earning weeks coming with all the mega tech that will have earnings in the coming week. So definitely there will be a lot of opportunities. Also there is an FOMC, so there will be a lot of opportunities to collect some money from the market. Wish you all the best to everyone, all the traders. Try to make good profits. Thank you for watching this video.